Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock related queries answered by the experts. So do get ready. But before that, let's have a look at what the markets are up to. So Cheryl, the markets are still holding themselves in green, but we have come off the day's highest point.
Absolutely, Shrishti. A very good morning to you. We are in green, but what's very key to note is the fact that we are flat. With a positive bias. That's how the benchmark indices are trading at this juncture. You have Nifty Bank that has given up most of this morning gains, trading with gains of about 0.5% as we speak. Take a look at what Reliance Industries is doing, because after having a good start, Reliance Industries has drifted lower. It has fallen approximately 1% from the day's highest point, now holding on to gains of about 0.4%. And talking about the list of gainers, then HDFC Life, that is the one that is the star performer in today's trading session. We'll have Sharad joining us in a short while to tell us what exactly is happening in the entire HDFC group of companies. Followed by HDFC Life, you also have Tata Consumer that is gaining in trade. Wipro is also buzzing in trade. Remember, Wipro announced yesterday that the board will be meeting in that April 26-27th board meeting. They will also consider buyback proposals. So on back of that, you have Wipro that is buzzing in trade. Apollo Hospital, Hero MotoCorps are other set of gainers on the Nifty as we speak. But on the flip side, it is the entire pharma pack that is under immense pressure in trade today. So you have Sun Pharma that is down about 2%, Dr. Reddy's down about 1.7%, Divi's is down 1%, Cipla is down 1%. These are among the top 5 losers on the Nifty. Add to the list, you also have UPL that is declining in today's trading session. So it will be safe to say that when you look at it on the sectoral indices front, it is the pharma index that is seeing a knock. It is among the top sectoral losers. The top loser, in fact, is the Nifty Media Index. That's the one that's declined about 1.4% in trade. Talking about the list of sectoral gainers on the sectoral front, it is a PSU Bank Index that's the top sectoral performer in trade, followed by Realty Index, as well as you have broader markets that are holding on to good gains, about 0.5% as we speak. So that's the way how the markets are trading at this point in time. But definitely today the focus will be on the private sector banking space because you have a lot of news flow, a different sort of news flow coming in for each of them.
Well, yes, absolutely. And today, IndusInd Bank is slated to report its number. But before we come and onto the Buy Now, Sell Now lens, discuss about the large cap private bank's name, let's focus on the HDFC Group, because that particular group is definitely holding good gains. And HDFC Life is the winner in Nifty 50 today. And with the partial relief from the RBI, HDFC Bank can now have 50% stake in HDFC Life. But what does this not mean for the HDFC Group? Sharad joins in to explain all of that. Take it away, Sharad.
Well, yes, in focus we are having HDFC Life, and the stake sale overhang is gone. Now this is because of RBI allowing HDFC Bank to increase their stake by more than 50% in HDFC Life. Now had this not been allowed earlier, then HDFC Bank would have actually sold the stake and get their minimum stake to at least 30% in HDFC Life Insurance. Now what happens? Because of this, the overall supply overhang, which could have been of almost 18.65% in HDFC Life, that has gone. And apart from that, now there's a possibility that HDFC Bank could actually increase the stake by almost 1.35% stake before the merger. Now let's looking at the total investors in it. We can see HDFC Life's major shareholders include HDFC with almost 48.65% stake, with also big investors such as Aberdeen and Exide Life. Apart from this, now let's look at the important triggers going ahead, and this means that HDFC Bank becomes the majority shareholder of HDFC Life. And of course, do remember that the alignment of interest would be there for both categories of shareholders in both their entities. Apart from this, also there is a possibility that the HDFC Life's counter share is expected to increase at HDFC Bank, leading to higher growth numbers. And to put it in perspective of the annualized premium equivalent, which is APE in an insurance company, currently HDFC Bank contributes almost 50% of it, so that's a major chunk. But going ahead, of course, the cost of distribution, that is expected to come down, and because of that the margins are expected to go up, as what the analysts are stating.
Thank you so much for that, Sharad. But let's talk about ICICI Bank then, because ICICI Bank on Saturday reported its quarterly numbers. If you look at the NII, they were in line with estimates. Also, you had provisions and asset quality that were much better than anticipated. Basically, your asset quality has shown some sort of an improvement. PAT also was in line with ET Now estimates. To break it down for you, the PAT was higher by about 30% on a year-on-year basis, coming in at around 9,121 crore rupees. You had NII that saw an uptick of about 40% as well. Talking about the NPAs, the absolute levels also, there has been a decline in the NPA. So you had the gross NPA, the absolute number coming at around 31,184 crore rupees. This is against 32,500 odd crore rupees a quarter ago. And the net NPA also saw an improvement on a quarter-on-quarter basis. Talking about the NPA ratio levels then, the gross NPA levels ratio was lower by about 26 basis points on a quarter-on-quarter basis, while the net NPA ratio was down about 7 basis points on a quarter-on-quarter basis. The advances and deposits both saw an uptick of about 5% sequentially. So good set of numbers coming in from ICICI Bank, and that actually has been endorsed by the brokerages as well, where CLSA is saying that ICICI Bank continues to be their top performer, top pick in the banking space. They have a target of around 1,200 rupees per share. JP Morgan has a target of around 1,150 rupees per share. And Jefferies also is maintaining a buy with a target of around 1,180 rupees per share. All of them have definitely said that the numbers were much better than expected. So that's ICICI Bank for you. But let's not lose sight of earnings and IndusInd Bank today, isn't it, Shrishti?
Well, yes, absolutely. And this time around, we saw healthy business update coming in from IndusInd Bank, wherein the advances were up 7% on a sequential basis, deposits were up 3%. And we look at if the CASA ratio, there was a marginal decline on that number. And talking about the overall numbers that are expected this time around, so let's talk about the NII, which is expected to show a healthy growth of 6% on a sequential basis. The pre-provisioning operating profit is expected to be up 4% on a quarter-on-quarter basis, but just have a look at the profit expectation, which we are expecting at 2,000 crores. This will be a key to watch because till now, HDFC Bank as well as ICICI Bank have disappointed marginally onto this particular number, and asset quality continuing with the trend is expected to improve around 16 basis point on a quarter-on-quarter basis for their gross NPA number. But definitely margins are expected to be flat, wherein slippages, especially from the MFI and the restructuring book, will be the key monitorable for IndusInd Bank numbers. So all eyes on IndusInd Bank. But Cheryl, talking about the stock movement among the three large cap names, there has been an outperformance by IndusInd Bank because in the past 1 month, if we see HDFC Bank is up around 7.5%, ICICI Bank is around 5.5%, but IndusInd Bank rather is up by over 11%.
Right, that's about the stock price performance. But where is the value lying in these private sector banks? Is it only these top three names that we discussed, or also add to that list you have Axis Bank also? That is the one that you need to discuss about. So let's bring on board our experts for today. We have Kunal Bothra as well as Ashish Maheshwari joining us on the show. A very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now. And Ashish, a lot of triggers coming in for the private sector bank. Mainly, it definitely is about earnings. But yes, the HDFC Bank getting that leeway coming in from RBI as well is something that you need to take note of. So in light of all of these news flows, where do you see value in the large cap private sector bank space?
Yes, I agree. So far, we have seen very good set of numbers from large cap private sector bank, and I think this trend will continue. Even IndusInd, I am expecting this quarter profit will be more than 2,000 crores. So 1,800, 1,900 and 2,000 crore quarter over quarter, their numbers are going to come. And on 27th April, when Axis Bank is going to announce their results, you may expect same set of performance what ICICI Bank has delivered. And one good thing which has happened for all these banks, as your fixed deposit, which carry a fixed rate of interest, has not moved up so much because they mostly garnered a retail kind of deposit. So where you were paying 6.5% rate of interest on fixed deposit, but at the same time, your lending rates have gone up significantly. So this is the reason why when you see the numbers of ICICI Bank, 5.3% net interest margin is humongous. So like this is the reason these particular banks will continue to do well. My first pick, in fact, post ICICI Bank numbers remain ICICI Bank, and along with that, I'm very bullish on Axis Bank also, and I think this will also do well. And third pick will be HDFC Bank because this HDFC life related issues now sorted out. So on SOTP basis, this will be very value accretive for HDFC Bank. So these three are my top pick in this segment.
Topics on your screen by Ashish Maheshwari. But Kunal, we were just discussing about the outperformance by IndusInd Bank, and you have been holding your bullish stance on this particular counter just ahead of the results. Just wanted to know how are the data patterns building up for IndusInd Bank, and also what's your outlook for Axis as well as your top recommendations from this space.
Good morning, Srishti. Good morning, everyone. So, first talking of the two previous names, banking names, HDFC Bank as well as ICICI Bank, both of these stocks, they entered into different stance in terms of results. For example, HDFC Bank entered the result in a slight positive, way. I think the stock was already at a fresh multi-month high for itself, and post results, in fact, we saw a reverse reaction where the stock actually opened with a gap up, but then it corrected by almost 50-60 rupees post results. ICICI Bank, on the other hand, went into the results on a negative expectation because the prices were actually correcting. On Friday, the stock made a low, I think around 885 odd mark, and then from there we saw actually a positive reaction. Surprisingly, IndusInd Bank is going through a very range bound kind of a price action for itself. So the stock has been stuck into this range of 1145 on the upside and 1115 to 18 on the downside. So the stock is almost at the middle point of this range, which means that possibly post the results, we can expect the prices to head up into the upper end of the range. So would be bullish on IndusInd Bank from a near-term play, but specifically from a longer-term perspective, I'm extremely bullish on the stock and expecting the stock to get into a bigger breakout, possibly in the next few months.
All right, so that's the view coming in from both of our experts on the private sector banks. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll come back with all of your stock-related queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now and ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, we are live on Twitter as well as Facebook. You can connect to us via those social media platforms, or you can actually tune into your TV sets and find us there as well. You can write to us on the WhatsApp number that's flashing on the top of your screen. Do remember to mention your name, also the stock name that you're looking to invest in. If you've already invested in the stock, then do mention the buy price as well as the quantity and the time horizon that you're looking to stay invested in a particular counter. That will help our experts help you better. And talking about our experts, today we have Kunal Bothra as well as Ashish Maheshwari on the show. And Ashish, before we get going with all the queries, let me ask you, what should retail investors keep in mind, especially during the earnings season, to make sure that the wealth is protected?
Yes, three things investors need to avoid as such to keep their wealth protected and make money. First is avoid leverage. As you know, the markets are very volatile nowadays, and if we'll keep on any position on leverage basis, the chances or the probability of losing money is more than earning. The leverage works when there's a bull run in the market, then you can take extra position, but markets are not like that. Second is avoid unnecessary trading. Your broker might be sending you hundreds of tips every day, but it's not necessary to trade on every tip and just get your stop losses getting hit. And third is as markets are volatile, so we need to avoid waiting for very big gains. So whenever you are having a certain percentage of gains and you are able to fetch it intraday, better book it.
Okay, so that's the advice coming in for all our retail investors. But with this, let's kickstart taking all your stock-related queries onto the show. And Ashish, the first question that I have is on Advanced Enzyme. The question is from Raji, and she's holding 275 shares of Advanced Enzyme from a price of 330 rupees. Currently at a loss, but in the past 1 month, the stock has seen a good up move. So wants to know, is that a wholesale or average at these levels?
I think you can remain invested in Advanced Enzyme stock. Such fundamentally nothing wrong with the company, but we have seen some selling by institutional investors a few months back. That is why stock has come down. But over a period of time, I think this will pick up once their good quarterly set of numbers will start coming in. Again, these enzymes, chemical, specialty chemical related stocks are again getting investors' attention. That is the reason I'm not advising to sell this stock. Just remain invested for some more time.
You from Anjali, she's writing to us from Nasik, and she's saying that you had given an IRCTC call target of around 630. She wants to know, is this still open because she's holding April futures at 611?
Well, yeah, it's still open. The stock still looks attractive. In fact, we had anticipated a breakout for IRCTC. The stock went up to, I think, 613, 14 levels, if I'm not wrong. And post that, it's seen a mild retracement towards 600, but now I think it's back towards 606, 607 mark for itself, which means that the stock, is very highly, with high probability that it's going to move up on the upside, because that mild retracement or dip has also completed for IRCTC. So would maintain that bullish stance with targets of 630.
Okay, Ashish, coming to you. The question is from Suresh, and he's holding two stocks. Firstly is 100 shares of DCM Shriram at a price of 914, and other one is Clean Sciences from a price of 1440 rupees. Wants to know your outlook on both of these counters for the next 2 years. Not at a huge loss right now, but what to do next and how should he place himself?
Yes, again, as if you ask me, nothing wrong as such with the stock per se, but as there's some retracement which has happened from the peak in DCM Shriram as well as Clean Science Technologies. So some profit taking has happened from the peak levels, but I'm expecting very good set of numbers in both of these companies in this quarter, because again industry is doing good. Whatever their 9-month profits were there, they were also quite significant compared to the previous year. So my suggestion will be to remain invested and wait for this quarterly in numbers before taking any call in both these stocks. Both looks good to me at this place.
All right, this one is coming in from Mr. Gopal Rao Kunal. He is 76 years of age and he's from Nagpur. He wants to know how is Glaxo, Godfrey Phillips and Graphite India for a short-term investment of about 3 months. I'm not sure if it's GSK, I think it's GSK Pharma only.
So Glaxo, Graphite as well as Godfrey Phillips, you said. Okay. So I think out of the three, Godfrey Phillips as well as Glaxo, these are the ones which look attractive, but both of them are completely different in terms of the beta nature. So I'm not sure whether you would be comfortable holding a high beta stock, but my assumption is that you've already scanned through that beta nature. So maybe I would recommend 2 out of the 3 names. Glaxo Pharma, the stock has come back towards a key support point of 1250 approximately. The previous highs for the stock was above that 1500, 1600 mark, which means that possibly in the near term there could be a turn of events. And as it is, the pharma index is going through a strong revival, which means possibly stocks like Glaxo can see some bit of an upside over the near term. Godfrey Phillips, and again a high beta stock over here, but the stock has come back towards a key support point from 2000 plus levels where the stock was almost 2-3 months back. It's corrected towards 1700 mark, which is again a very strong multi-week, multi-month support for Godfrey Phillips. So risk reward for both of the stocks would be attractive. Would suggest these stocks rather than Graphite India.
Okay, moving on, and Ashish, coming to you for the next one. The question is from Mani and from Chennai, and he's saying that since pharma sector is showing a good uptick, is Gland Pharma and Laurus Lab good to enter at current level, since they have corrected a lot from their 52 weeks high, and at what price he should enter in any of these counters if you like, and if not, then which stock from the pharma space would you recommend?
Yes, these are the stocks slightly underperformer compared to other pharma sector stocks. So I'll go with some other names instead of these two stocks. My preference pick will be Zydus Life Sciences at 520 odd level. This stock is quoting and doing pretty well compared to peers, and as well as Glenmark Pharma is my again pick number 2 in this particular sector, because I'm expecting again very good set of numbers in Glenmark in this quarter also. So you can pick these two instead of Laurus or Glen.
Another one coming your way, Mr. Ashish, and this one is coming from Krish. He has 100 shares of Grindwell Norton at an average price of around 1,800 rupees per share. He wants your view on Grindwell Norton as well as Carborundum, which he's saying that is performing actually a tad bit better than Grindwell.
I think for quite some time we haven't seen any good performance in both these stock as such. So fundamentally nothing wrong, but as the industry is not doing that great, so this is the reason these stock were also subdued. But fundamentally very good companies, and if you are a long-term investor, both stock you can remain invested.
Okay, moving on, and the question is from Dr. Shyam Ashish. I'm asking you because this one is on Solar Vineyards. He's holding 105 shares from a price of 415, a recently listed counter. How do you see it, and which targets he should expect for this one?
Yeah, we have seen the stock correcting, then again bouncing back. In last week, the stock touched almost 410 levels. Then some profit taking has happened. But this is again a good company, and we are going to see very robust set of numbers in this quarter also from Sula Vineyard. And again, this particular sector, which is brewery sector, is doing pretty well. Whether it's now United Spirit or UPL or Radico, all are doing better. So Sula Vineyard, I'll suggest to remain invested till this quarterly numbers. I'm sure 415 will come.
All right, this one is coming in from Balan, and he has a very interesting question, Kunal. He wants to know if he should exit his positions in Ashok Leyland, Orient Hotel, as well as Bharat Forge, and look to switch directly to ITC. So his buy price for Ashok Leyland is 140 rupees per share. For Oriental Hotels is 72 rupees per share. For Bharat Forge is 740 rupees per share. So should he exit from all of this and put all of that money in ITC instead, or should he hold some and let go of some?
No, I think you should hold all three of them. I'm not sure that what's the rationale of booking all three of them and shifting towards ITC at this point of time. I think if I'm not wrong, Bharat Forge as well as Oriental Hotels, these two stocks are in good profits for as compared to your cost price. So I don't anticipate that the switch has to be made. This is a market which has started to see some revival. So it's bound to be that some stocks tend to revive first and then some of them they follow later. But then the chart patterns for Oriental Hotel, Bharat Forge, they look fairly attractive. My only concern is with Ashok Leyland because that stock is something which is very low beta in nature. For the stock to move up higher to 150, 160, at times it may take a lot of time for itself, maybe a few months, few quarters, to move up to that kind of a price trend for itself. So I think if possible, make that switch from Ashok Leyland towards ITC, which you are looking to invest into. But I would suggest to hold on to the other two, Bharat Forge as well as Oriental Hotels.
Okay, Kunal, once again coming to you, the question is from Raghavendra, and he's holding 10 shares of Adani Enterprise from a price of 2,800 rupees. Sitting at a loss, he wants to know whether to hold this counter or book losses.
See, I'm not sure what the, with the kind of news flow we've seen for Adani Group of stocks, whether there's going to be something which is going to be positive or negative over the near term in terms of news flow. So that could always remain an overhang. Purely scanning this as a chart, I think it doesn't look attractive at this point of time because of the way the charts have been positioned for Adani Enterprise. Maybe if the stock crosses about that 2,100 mark, which has been the last 2 month, 3 month swing high, then prospects could improve for Adani Enterprise, but then that would be a big if for the stock price. As of now, the chart patterns look a bit risky. I would suggest to either sell the stock, but not to add, of course, at current levels.
All right, so that's the view coming in on Adani Enterprises. But on that note, we slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock-related queries. So viewers, don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where you get all the stock-related queries answered by the experts. And onto the show today, we have Kunal Bothra as well as Ashish Maheshwari with us. Kunal, coming to you for the next one. Quite an interesting question from Dr. Methi from Trichy, and she has two questions for you. Firstly, which is better option for options trading, Bank Nifty or Nifty rather? And she also wants to know few of your favorite stocks for option trading.
And whatever makes money at the end of the day is good. But out of the list you've mentioned, of course, Nifty and Bank Nifty options is what we generally do trade as well as recommend to our clients. So the idea over here is that if you're okay with having an extensive amount of lot size, and if you're looking to buy the options or sell the options, whichever way you're looking out for, these are liquid instruments. So I always prefer or recommend options, whether it's in stocks, indices, which are very liquid enough. So we don't generally venture out into those illiquid stocks. However lucrative the option may be, because there is not enough size to, there is not enough scale to achieve into these names. From the list of stocks, I think few names which we generally tend to be quite extensive in terms of recommending from the banking names. ICICI Bank is the top favorite, SBI is the second one, IndusInd Bank are the three names which we generally tend to look out for in large cap banking names. From the mid cap end, I think IDFC First Bank is something which is very, very attractive because of the nature of trend for the stock prices. The list can go on, but then as I said, that the basket in which you should ideally filter should be stocks which are liquid in terms of options, as well as which have a high turnover for the at the money as well as slight out of the money strikes.
All right, this one's coming from Vinay. He's writing to us from Bangalore. He wants to know about Tejas Networks, Kunal. 50 shares at a price of 634 rupees per share. He wants to know whether he should sell or average.
I think you can just look to hold on. My belief is that the stock would just consolidate over here for some more time. The reason for that is because both the 50 DMAs and the 200 DMAs have flattened out for Tejas Network, and that generally is an indication that the stock may not be too much ready for an upward move, but it may be going through a time-wise correction. Difficult to anticipate that how much would be the time-wise correction for the stock price, because at times the correction could probably happen or get completed in a few weeks. Sometimes it gets carried on for a couple of months as well. So I would believe that you just hold on to the stock as of now. In case if it dips back towards 600 mark, that could be a point where you may look to average further.
Okay, so that's a hold coming in on Tejas. But Ashish, coming to you for the next one. The question is from Ramachandra, and he's holding shares of Kalyan Jewelers at an average price of 114 rupees per share. Is that a hold or sell at these levels at a mild loss this point in time?
Yes, this is again a stock which is supposed to do well, because the way Titan was doing good and gold prices were moving high. This stock has not done that great. In fact, it has delivered negative return in last some time compared to PSET. Again, reason is some block deal of institutional investors has happened at a lower price, and some hangover there for Kalyan Jewelers also for same. So my suggestion will be to exit from this stock, and because I'm not expecting that it will give you good return. Instead of this, I'll suggest you buy the stock of NCC at 114, which can give you at least 10% more upside in next 3 months. I'm expecting, which Kalyan Jewelers cannot deliver.
All right, coming to you once again, Ashish, because this one is coming from Dhananjay. He wants a technical as well as a fundamental view on Valiant Organics for a period of 2 years. He's looking to invest afresh, but instead of getting the technical view, I'll come to you on Valiant Organics. How does this one look to you? Fundamentally, does it make sense for someone to enter afresh in this particular counter, even though if it's for a matter of 2 years?
That's like as I was sharing, these chemical stock and particularly specialty chemical stock have started showing some strength after a long time, but not everything is moving. So I'll suggest another stock which can give you better return, which is Anupam Rasayan. This is stock available at 1060 odd levels, and this has good potential because the kind of large deal ticket size what they have won for supply of specialty molecules. This will be a game changer for this company. So in my view, this has potential to give even 20-25% return in next 6 months. So Anupam Rasayan will be a better bet.
Okay, Kunal, coming to you for the next one. The question is from Vignesh from Chennai, and he says that he is holding HULPE 2460 rupees PE for the May month. He didn't share at what price he did enter, but since it's in out of the money still, what's your outlook going ahead? Any chances of earning profit in this one?
Yeah, I think you should look to hold on. I think you said May series, right?
Yes.
Yeah, I think they should definitely look to hold on because the recent chart patterns indicate that the stock rallied from 2400, moved closer to the 2600 mark, tried to break the 200-day moving average. It sustained for a day or two, but then there was no convincing breakout for the stock above this 200 DMA as well as above the 2600 mark, and it's retraced back again, which means that it's inherently a weak chart and would take a lot of time to break past above the 2600 level. So I think in that anticipation, you can continue to hold on.
Okay, this one is from one of our Twitter viewer, and this one is from Sunny. He has 400 shares of sale at a price of 83 rupees per share. Kunal, what should he do? He wants a view on the short term. Also, what could be the possible target that he can look out for sale?
See, I think a breakout point for sale is about 94 mark. Largely, the stock is into a huge range for itself. So from 94 on the upside to closer to 74, 75 on the downside. This is a 20-point range for sale, which the stock has been trading in the last 5, 6, 7 months. So I would believe that maybe the stock can continue to exhibit same kind of a range action for the next couple of quarters. A breakout above 94 is only where you should look to add on the upside, or else if it comes back towards 74, that's the zone where you should look to add further. Till then, I think you can just continue to hold on to your existing quantity.
Okay, Ashish, coming to you for the next one. The question is from Subrata Mukherjee, and he wants to have a short-term outlook on Wipro. This particular company will be planning for their buyback along with their earnings declaration on 27th of April. Just ahead of the earnings we are seeing on the back of this announcement, the stock is holding a gains of 2%. But going ahead, what's your outlook and what should be the expectation of the retail investors? Ashish,
With this buyback related announcement, I'm sure they are going to come out with bad set of numbers. So this is the reason, at least there is an attempt that investors should not sell this stock. And I'm not expecting any great set of numbers from Wipro. I'm expecting even profit on quarter will be lower by almost 2%, and top line growth will be also very static here. So I'm not that bullish as far as Wipro is concerned. In my view, you can sell this stock and buy some other quality stock where you are not going to have such negative set of numbers. So I like here more Persistent and Coforge compared to Wipro.
All right, so that's Ashish's take coming in on Wipro, and he prefers actually mid-cap IT companies in comparison with Wipro. Kunal, this one is coming in from Kunal, your namesake. He is writing to us from Mumbai. Elecon Engineering, about 10,000 shares at a price of 200 rupees per share. What should he do?
Wow. So I think it's a good profits. Stock has already doubled from your cost price. It's still looking very attractive because of the recent recovery for the stock from 380 to 444, 50 where the stock is trading right now. Looks attractive. I think you should continue to hold on. Maybe closer to 485, 490, which is the previous swing high for Elecon. That's a zone where you can look to start booking out, say, partial profits. I would not say go for full profits over there, but maybe at 480 odd levels is where you can look to maybe book out 30%, 40% profits from your existing holdings.
Okay, Ashish, coming to you for the next one. The question is from Subrata Mukherjee, and he wants your outlook on IRB Infra. Since the infra space is doing well, wants to know how do you see the trend shaping up for IRB Infra? He bought the shares at a price of 28 rupees 50 paisa.
This is a stock which is a grossly underperformer in spite of good set of numbers, good JVs, what they're having, good shareholders. But stock is continuously underperforming even after a split. Stock is not going anywhere. So my suggestion will be to exit from this stock, and I'll suggest another stock that you can look at is Capacity Infra. This is a stock which is again into construction of real estate per se, and can give you better return compared to this particular stock.
All right, moving on. Let's take the next query coming in from SK Saran, writing to us from Bangalore. Kunal, for you, 50 shares of Bajaj Auto at a price of around 4,000 rupees per share. He wants to know what's the target that he should set for this particular counter as well as an exit price.
See, I think 4,400 has been the near-term target which I've highlighted for Bajaj Auto almost 2 weeks back when we started to initiate strong bullish calls over there for the stock. It's nearing those levels. I think 43.25 is the last I had seen for the stock. So I think maybe another couple of percentage points from current levels is where you can look to start booking out short-term profits. But if you are looking out for say 6 months or 1 year plus kind of a time horizon, then I believe that the upside potential has just started off for Bajaj Auto because it's confirmed a very big breakout on the monthly charts. And the stock coming out of almost 2 years or 3 years of hibernation, if I can call it so, looks attractive from a 6 months to 1 year time horizon. But I'm not sure if you're okay to stick to that kind of a time frame. Short term wise, 4,400 could be a target range where you can start booking out profits.
Okay, so 6 to 1 year, continue holding Bajaj Auto, and is also a results candidate. Results tomorrow for this particular company. Ashish, coming to you for the next one. The question is from Bisakha, and he's a long-term investor and wants to know the outlook on Sun Pharma and Concor. Are these two counters? Should he add these two counters in his portfolio with a vision of next 3 years?
No, I'm afraid these are not that great bet and grossly underperformer as such. Concor is also just waiting for the disinvestment thing for quite some time, and Sun Pharma again some negative news related to their Ranbaxy plant, and stock has also roaming in that very narrow range compared to other peer set. So my suggestion will be to avoid both the stocks, and again Sun Pharma. I'll again prefer if you can look at Glenmark or Zydus or even Lupin, which can give you better return compared to Sun Pharma. And against Concor, I'll prefer that you look at Majgaon Dock Shipbuilders or Cochin Shipyard, which can give you better returns compared to Concor.
This one also is coming from another Kunal for you, from Kunal Thakkar from Mumbai. ITC 390 call option, June call option. He's bought it at around 20. He wants to know whether it makes sense to stay put with this one.
Wow, I think June, which means you are expecting the stock to move up higher in the next 2 months consistently from current levels. Well, if that's the case, then I would believe that buying May option would have been a bit more better. Yes, you would have probably paid a slightly higher price, but then the liquidity would be very strong. And when you're buying in the money put call options for stock prices, it's as good as buying futures for the stock, and specifically for a stock like ITC, where a 4%, 5% higher tick, is a good enough uptick for the stock. So I'm not sure what's the rationale of you buying this, but yeah, direction wise, ITC looks attractive. My near-term targets are closer to 414, 416 mark for the stock price, which means possibly another 10 to 12 rupees higher from current levels is what I would expect, say for the next couple of weeks. So that's where probably we may look to revise the targets on the upside if the overall market structure also remains positive. But as of now, I think you should just play for short term. 414 to 416 could be a near-term target range for the stock.
Okay, that's the view on ITC. But for this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back and we'll be taking more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of your stock-related queries. But at this point in time, just take a note of the markets. We have now actually given up those gains, trading flat, but with a negative bias. It's flip-floppy, but 0.5% off the day's highest point. This one is coming from Pranav. He's writing to us from Nagpur, Kunal, and he has IRCTC at an average price of 258 rupees per share. He's saying the stock has been declining on a daily basis. So what sort of a target should he set for this one, or should he look to exit this one and invest somewhere else? Because he's anyways making good profit.
You said IRCTC at 200 rupees.
Yeah, 258.
258 seems a bit strange because so I'm assuming that this would have been adjusted prices for you for IRCTC. But nevertheless, I think the stock in fact looks attractive to me on the short-term charts, and my belief is that 630, 640 could be a near-term target for IRCTC. It's getting into the revival phase, so it will take a lot of time because of the last 1-2 years of sharp selling. The stock generally takes some time to recover, but then once the stock starts to show a tendency which is in line with the market, that when the market moves up higher, the stock also rises up higher. That's a sign of strength for the stock price. I would believe so for IRCTC and would recommend to hold.
Okay, moving on, and the next question is from Chandrasekhar, and he has shared a long list of stocks in his portfolio, not able to take all of them due to time crunch. So Ashish, I'm taking the first query of his, that's on Dishman Carbogen. He is holding 1300 shares from a price of 163 rupees, sitting at a loss, but what's your outlook going ahead? Seems like he's a long-term investor.
Very bullish as far as this main Carbogen is concerned, because again this is a CRAMS kind of a story. So not that great valuation or not that great demand is there of such companies. So it's a avoid in my view.
All right, this one is coming in from Puneet. Kunal, this one is for you. Bajaj Finance, 5800 put at 48. It's April series. He wants targets for this one.
5800 put for April series. So I think the best the stock looks like a weak chart, but then I don't expect the stock to fall very sharply in the next 2-3 days of this April expiry. I think the best which you can probably expect maybe 57.20, 57.50 for the stock price, which could be just 2% or 2.5% from current level. So I'm not sure the current market price of the 5800 put option, but I think 5720 to 5750 could be a possible target range on the downside for the stock in this April expiry.
Okay, Kunal, coming to you for the next one. The question is from Arvind Reddy, and he is holding shares of NCC, sitting at a profit of 35% right now. Should he book profits or continue to hold on or add more is the first question. And he also wants to know your outlook on Manappuram Finance. This particular counter was on your radar. So is it still worth entering in this particular stock?
So which means possibly you've entered NCC around 80-84 levels. Looking at the current market price, my expectation is 122 could be a possible target for the stock. If you can hold on to the stock till that time frame, that'll be good, because possibly the stock may show signs of strength going forward as well. So 120 plus could be a target range for NCC. For Manappuram Finance, I'm extremely bullish on the stock price. What we've seen in the last 2-3 months is a very strong recovery for Manappuram Finance, and of course the gold finance sector as such. Would be bullish on the stock over the near term as well, and would expect 140, 150 as a medium-term target for Manappuram Finance.
All right, this one's coming from Anand Mahishi from Bengaluru, and Ashish, he has a couple of tech names in his portfolio, and I think it's above almost 6 or 7 stocks that he has in the tech space itself. So he's saying out of all of those stocks, he wants to look to retain Happiest Mind, Infosys and LTI Mindtree in his portfolio. All of them are around his buy price. What's your take on this one? What should he do?
LTI Mindtree, I think you can remain invested after this correction. Happiest Mind as a stock, I'm not that bullish. Again, a very underperformer stock in this space. So Happiest Mind you can swipe with KPIT, which can give you better return.
Okay, but with this, viewers, let's kickstart the rapid fire session. And Ashish, coming to you for the first query. The question is from S. Balasubramaniam, holding shares of HDFC Life from a price of 543 rupees. After the great up move, still at a loss, but what to do next?
Yes, I think you can continue to remain invested. I think the hangover related to stake sale is over, so this may again start moving up.
Okay, Kunal, this one's coming from Sri from Kerala, 100 shares of USL at a price of around 856 rupees per share. Wants to know what to do with this counter, exit, hold or average, because the viewer is suffering a loss in this one.
It's been an underperformer. I would suggest to make a switch from this stock to either Radico or United Breweries.
Okay, Kunal, once again, question for you. Vaishnavi is holding shares of RK Forging from a price of 240 rupees. What's your recommendation or what's your advice on this one?
Continue to hold on. It's been a class performer from the mid-cap space. Would recommend to hold on to the stock.
Okay, Kunal, this one is from Ramesh from Kolkata. First of all, he wants you to give him a big smile, and secondly, he wants to know about data patterns, whether he can buy this one at current market price or the short term.
I'm not sure how big I can give a smile, but then data patterns is something which looks attractive. I think you should look to hold on. Possibly, if you can add at current levels, that'll be great.
Ashish, Purnima is holding 30 shares of Tech Mahindra from a price of 1,000 rupees. Is this a good time to hold this particular counter? What's your outlook?
Yeah, I think post this correction, Tech Mahindra is a good buy, in fact, at this price. So you can continue to remain invested in those who are looking for long-term investment, they can buy.
Okay, Kunal, this one is from Kabir. He's writing to us from Punjab. He wants to know, would it be prudent to re-enter Mishra Dhatu, that is Madani, at current market price after having squared off somewhat buy price at around 240 levels?
I would suggest an avoid as of now. If possible, shift towards BEL or HAL. They are better stocks in that category.
Okay, Kunal Phillips is holding 7 shares of Apollo Hospitals from a price of 4,425 rupees. He's looking to invest to Bajaj Finance. So what's your advice?
I would suggest to hold on to Apollo Hospital as of now, not to shift to Bajaj Finance as of now.
One more coming your way. Kunal TP Vinod from Salem wants to know whether he can buy or average Abbas Financiers at current levels.
Not recommending a buy, neither an average.
Okay, Captain Rama Rao from Pune, Ashish, is holding 50 shares of Latent View from a price of 532 rupees. Can he hold for another 6 months? Your outlook?
Yes, if you are having 6-month time frame, stock can surely rebound from here.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Kunal, as well as Ashish, for joining us on the show, giving us a take on the large cap private banks, as well as resolving all of the stock related queries. And viewers, we are totally out of time on this edition of Buy Now Sell Now. Goodbye from Shrishti, myself, and the team that put the show together.